Then maybe to really just get this conversation started off here, the biggest variable, the biggest macro factor out there, the one thing that's going to dictate the health of markets above most or maybe even all other things, is it Donald Trump and his agenda as the president of the United States, or am I like off base and it's actually something else?
So I think you're on base. I think that that's kind of an extension of fiscal dominance, is to say that basically those that are running fiscal matter a big deal. In addition, they have a variety of other things like tariffs that, while that is technically part of fiscal policy, it touches other parts of the economy as well. And so I still think it's the case that generally speaking, Fed-related stuff is not like the number one thing. It doesn't mean it's not a variable, but anything kind of monetary related is a little bit in the backseat compared to fiscal. And another way of thinking about this is that we're at a potential pivot point because we've had almost 2 years of fairly similar macro environment, which was Fed's tightening, they're draining liquidity, and the Treasury is putting liquidity back in. They're running very big deficits, but then they've also shortened the average duration of their debt. Or more specifically, it's correct to say that they've issued extra T-bills, which are their most cash-like debt instrument that they have, that has sucked extra money out of the reverse repo facility. It's kind of like taking excess QE from a couple years ago and putting it back into the market while the Fed's doing quantitative tightening. As you've had that kind of offset, I would say that dynamic began in like early 2023, and it's really been in place ever since. And we're getting toward the end of certain trend points, which is to say that there's not much money left in the reverse repo facility. So we might have more of a shakeup between the Treasury and the Fed.